Hey everyone! Welcome back to Roadrunner News, your go-to spot for quick updates that actually impact your wallet. Let's dive in.
In Alaska, where there was supposed to be a ceasefire agreed, and there wasn't, that there would be massive sanctions imposed on the oil industry of Russia by the United States. And there was no ceasefire agreed and no oil sanctions. Now all of a sudden Trump is saying, I'm going to release the sanctions if the EU and the Canadians and other countries impose tariffs on China 100%. Everybody's got their own trade agreement with China that's not a sanctions should be on Russian products or on Indian, Chinese, and Turkish oil companies.
All right, I've got to leave it on that note. I'm out of time. Mr. Browder, thanks for your time as always. Appreciate it.
Thank you.
Phil Browder, he's the author of bestsellers Red Notice and Freezing Order, a key target of Russian.
This is the Bossy Cabela Show on the iHeartRadio
Only a few days left to get 2 pairs of glasses for $149 plus 50% off lens options at Specsavers. Conditions apply. See Specsavers.ca. I'm off Lacani, your next updated current life.
36081. Again, 1-800-353-6081.
How can you protect your keys? Simply attach a Lowramp key tag to your key ring. If you lose your keys, the Lowramp can return them to you by courier for free. Lowramp key tags, they're free and they work. Order yours at lowramp.ca.
Hot water gone cold? Switch to a new tankless water heater from Enercare. Save space, energy, and enjoy reliable hot water. With Enercare Advantage, you make one predictable monthly payment. No upfront costs or repair fees, free installation, and they'll take care of your existing water heater. For a limited time, get up to $1,500 on a prepaid credit card with a new tankless water heater rental. Details at enercare.ca. Terms and conditions apply.
Enercare, experts at home. How did Babbel become the award-winning language learning app? How about you? Oh, 6 years. As a visual learner, she uses Babbel's wordplay videos.
Today I'll show a quick lesson on shopping for us.
Merci beaucoup. Malcolm is a listening learner. So he checks with Babbel's speech recognition to be
Great deal.
however you learn. Babbel makes it easy. Save up to 50% on your Babbel subscription at Babbel.com. That's BABBEL.com.
We're standing proud together. I'm Colin Mockery.
I'm Jeff McGrath.
And we're making serious changes to the way we shop. Like this tube of toothpaste, made in Canada.
Yes, made in Canada. It's not toothpaste.
Really?
Sure, it's Redmi too.
Oh, I'll take 2 then.
Let's protect Canadian jobs and Canadian business.
Shop as if your country depends on it. Keep your money in Canada, for Canada. This is the Vassy Cabello Show on the iHeartRadio Talk Network.
We're talking today about the Bank of Canada's decision to lower its key lending rate, so it now sits at 2.5%. First time since March, they've lowered the rate. It's also the lowest we've seen since this time back in 2022. You guys are sending in a lot of questions about your own finances, and in particular, when I asked for a explainer question, we got a bunch on Instagram from people who want to understand how this whole thing works with the Bank of Canada and setting interest rates, and really what it means for you when you're trying to access a loan, a line of credit, or a mortgage. Let's do it. Dave, explain it.
Explain, please. The explainer.
Here to help us out is Alan Small, Senior Investment Advisor for the Alan Small Financial Group. Hi, Alan. Welcome to the show.
Thanks for having me.
I appreciate you making the time. So we got a bunch of questions over the past few weeks, largely from Instagram, from our listeners who would like to know more about what is actually the Bank of Canada's key lending rate? And today's a perfect day to delve into that subject. So if you were to explain it in the simplest of terms, what is the rate of data?
So the Bank of Canada rate, which is what, 5%, which is 75, so divided by 25 points. And that's the rate that the Bank of Canada provides or charges or gives to the main banks here in Canada. So Royal Bank, TD Bank, etc. And then the prime rate is the rate that our major bank charges all of us. When we want to borrow money to take out a line of credit or to borrow to buy a home, for example. So the prime rate, which is the one that is most important to us, that feeds off of the bank rate, and that's how it works. So whenever anyone sees the Bank of Canada cutting interest rates, then they should automatically assume that the main bank here in this country will follow suit and cut rates to all of us for those that want to borrow money, as I said, for a line of credit or for a variable rate mortgage.
And how soon does one follow from the other? Like today the announcement was made, and how soon would you expect the bank's prime rate to cut?
I would say that they'll cut it very quickly, usually same day. The major banks will announce a 25 basis point cut to the prime rate, and that should take us down, I believe, in and around 4.7%. Prime rate right now, 4.95. With the 25 cut, it'll be 4.70. So right now, for example, if someone were to go to a bank and say, what can I get on a variable rate mortgage? So a mortgage that the rate move depending on interest rate, Bank of Canada rate first, and the prime rate, then you're going to be 4.7, and some banks will even say, hey, we'll give you a bit of a discount. We'll charge you 4.7 for a loan, minus 50 basis points or minus 25 basis points. So maybe you could get a prime rate or a lending rate from the bank or many of the banking institutions less than prime or 4.7. You might get it at 4.50 or 4.45 or 25. It just depends on what your banks are willing to do for the individual.
Okay, that's a great point, because I feel like many of us would just assume we got to take whatever the first offer is kind of thing. And it also makes me think, does each bank do the same thing? Is there, or can there be some variance in their reaction to a decision on the key lending rate, or do you expect uniformly they will all reduce that prime rate, and then beyond that you might have to?
That's correct. So they all will reduce their prime rate. I think usually in lockstep, meaning if the Bank of Canada reduces it by 25 points, usually the banks do the same. There were times when the interest rate got so low a few years back that the bank said, well, we can't maybe reduce it as much as the Bank of Canada can, and maybe we only can reduce it 10 points instead of 25. That is possible. However, usually if the Bank of Canada reduces it by 25, all the banks follow. And then from there, each bank can do their own thing. They could further or cut, or they can give you what I would call these special deals, right? For a few months, Bank of Montreal, for example, will cut rates by prime rate minus a certain number, or TD Bank could give you a special deal only available for a short period of time. So each bank can do their own thing depending on their business and what they can afford to do. So once that prime rate is reduced, then after that, all banks can do, or all lending institutions can do whatever they like.
So I think a lot of people will be listening to this and thinking about either if they are about to take out, for example, a line of credit or enter into a mortgage in the next few months, what their next move is. And I'm wondering from your perspective, there isn't widespread consensus on what's going to happen in October because there's another rate decision coming. But there are enough private sector economists speculating that there might be another cut in the cards then. What is your best advice to someone who's in that kind of spot right now, thinking about making, heading in that direction, but not sure if they should wait a little while? What do you
I think 6 months from now, the rate will be lower than it is today. I believe the Bank of Canada should and may even be forced to cut to try and stimulate the Canadian Canadian economy. Right now, Canadian economy, because of the tariff situation, primarily, but because of the lack of growth in Canada, we're seeing very slow growth. We're seeing businesses having a lot of difficulty, depending on what sector of the economy you're in, whether you're in housing, manufacturing, automobiles. These are
Random.ca. Love is now a three-letter word. L-O-V. Lexus of Vaughn. Enjoy an elevated luxury car buying experience with exclusive programs, transparent pricing, and modern processes that put you, the guest, in the driver's seat from start to finish. Come for the quality of our cars. Stay for the quality of our service. Now that's something to L-O-V. Lexus of Vaughn. Near Canada's Wonderland in the Maple Auto Mall. Luxury is closer than you think.
Part of the Dakin Auto Group.
Welcome back to the Vassy Cabello Show on the iHeartRadio Talk Network.
It's 25 minutes before the top of the hour. Yesterday, we saw the Bank of Canada's Governor Tiff Macklem cut the bank's key lending rate to 2.5%. That's the lowest place it's been in 3 years. He talked at length about the risks to the economy and informing that decision, including majorly slowing growth. My question to Parliament's budget watchdog is, if that's what it does to the economy, what's it going to do to federal finances?
The Canadian economy is not necessarily in the best shape. I think as the governor put it, it doesn't necessarily feel particularly rosy out there right now. Even if we're going to have positive growth going forward, it's not going to feel particularly great. And there's a direct linkage with respect to the state of the nation's finances, so the government's budget deficit. As you probably are aware, we published our last economic fiscal outlook just before the election. And things have gone a little bit worse since that time in the economic side. Certainly, uncertainty has continued to persist. It's certainly built with respect to our trade with the U.S. and the potential outcome of trade agreement renegotiations. And you're really starting to see it in terms of unsaid business investment and also some impacts on labor markets. So, of course, over the course of the summer, 100,000 Canadians losing their jobs. So it's not necessarily the economic side. And of course, if you don't have a job, you're not paying taxes. You expect some sort of support from the government, either through employment insurance or other types of support. And of course, a combination of lower revenues and higher expenses means higher deficits overall.
Okay, that's what I was going to ask, particularly on the revenue side. If the economy in the second quarter is contracting, the trend continues and unemployment is up and unemployed people need help from the government, will that, in your view, ultimately have a depressive impact on revenue? Like, is it almost a foregone conclusion?
Oh, absolutely. It's the way in which the federal finances are structured. During periods of downturn in the overall economy, deficits increase because spending increases. We have a social safety net. It's in place so that when people across the country face hard times, collectively as Canadians, we agree that the federal government is going to step in and help people out, both in the short term to make sure that they're not going to lose their homes, but also in the longer term to make sure that they can receive retraining so they can move into their next job. And then at the same time, after doing that, it would be fair to pay taxes on money that they're not earning, so those revenues go down at the same time. But hopefully, what we've seen over the past 75 years, once we get out of the recession and once we get out of this sticky economic situation, things start to turn to the positive side, so the deficits start to shrink.
In the interim, while we exist in a period of uncertainty and while the negotiations, for example, around SEGMA are still start and then become ongoing, there's a lot of focus obviously on this budget. I know you're well aware of that. We haven't had a budget since April of 2024. How important is this one?
I am at great pains not to engage in hyperbole. So this budget ends up being important.
You're definitely not politician.
No, this is easily one of the most important. It's one of the most important budgets that we've probably seen. I've probably seen since I started working in the Department of Finance in 1998. So we have a budget where it needs to address a fundamental assumption in our economy and how our economy works, and that was we are tied at the hip of the United States, and that's gone. So all of our historical economic modeling was based upon the idea that don't worry if the U.S. recovers and grows again in 2, 3, 4 years. We have those connections in those supply chains, and things will start to take off for us. That's gone out the window at this point. And so at a macro level, what we're looking for, certainly on our side in the budget, is a plan, an economic plan that will demonstrate.
Thanks for watching. Don't forget to like, comment, and subscribe for more real money updates. See you in the next video.